Hey, Mr. Roy.
Good morning.
How you doing?
Yeah. Good. We got a little bull flag forming here on the charts this morning.
Yeah.
Looking like it wants to break out.
Had a good start to the morning. I'm up on everything so far. So I took one trade and take profit trader. I got 100 and what am I at? 132.50 on it. The trade on futures desk. I got 68.85 on it, and I took a trade overnight on a combine, and I got $200 on it. It wasn't anything special, but I was just kind of testing something out, and it worked. So
nice.
And if we can get a pullback here, CBD's 46, 47. It's dropped to 43, but I would love, I'm not going to lie to you, I would love a pullback to the 52, 50 area. Oof.
Oh, yeah.
So it's time of support there, buddy, and we're going long again.
We're going to do anchored VWAP. Forgot about that.
Yeah, well, we're not going to do it when you do it this time. How about that? Waiting. Well, I forget I'm on the down. The 1 minute chart over here, so it throws me off when I go to find it. I'm like, why do I gotta go back so far? Well, it's 1 minute chart. So big red bubble.
Yeah. Right is it enough though? So this is
next.
Trying to look at pre-market range high was at 61.58, so we're right at it. We are right at anchored VWAP as well. Could get a little push down here.
50.
SPX is at 61.0525, so does it push it down to 6100 to find support and then bounce? Does it find it here at 61.05? Powell is set to speak again in 12 minutes. This will be to the Senate, I believe. If I'm not mistaken.
Yeah, you had Trump speaking at the NATO or the whatever NATO event this morning or whatever it was. So you had that. Roy, we got nobody watching on YouTube. Everybody's from Twitter. Twitter's growing, so nobody from YouTube. So I'm going to tell you, I did go on tilt yesterday on a Top Step account. We'll say it when we have no YouTube viewers. I tell those guys too. We mess up.
I know. Yeah. I mean, I do all my confessions when the priest is out of town. So
I'm not Catholic. So do that. My deal is it's Roy's like, oh man, and I don't like it, right? But I also own the fact that I did it. So instead of feeling bad about myself about it, why don't I just not do it anymore and grow from it? That's my point.
Yeah. I mean, I was there last week. I had that happen to me, and it sucks.
We got somebody watching on Facebook now. Welcome.
We got Tide's doing. Tide's doing a major shift, as you can see. Bookmap is showing that shift, but
I'm in no hurry to go along here.
You are getting a very aggressive push down here.
You're getting some big old bubbles too. Big old red bubbles. But the one thing about these big old red bubbles, if it goes down to 50, and that's where if we get another red bubble then a green bubble, that means it absorbed those orders, right?
Mm-hmm.
But it absorbed them all right. Wow, did it absorb them? Lord have mercy, did it absorb them?
Well, all right. I have passed the take profit trader account.
So you went short. Wow.
I went short. I did. That's at 61.60. I went short, and I needed $200, and we got it.
I like your style. Even though I wouldn't have trusted it, but it did move down. So good job.
Thank you. I guessed the bubble, which is not what you're supposed to do. But I didn't like that it wasn't. I didn't like that it wasn't breaking out pretty aggressively. Kind of lingered a bit.
That was part of my problem yesterday. I tried to guess the bubble, and when it was too late, I was like, "What the hell are you doing? Like, wait for the damn bubble to form." It's that easy, and you just we do it. We all think we can do things we can't always do. So, yeah, I'm in no hurry to do anything right now. I said I wanted this 50 area, but I don't know if I want this 50 area anymore.
Yeah, I mean, Powell's going to be kind of the same as yesterday. There's not going to be much there, and to be honest, regardless of how the perception is out there, the market and the bond market, most importantly, liked what he was saying yesterday. You didn't see a spike in yields, and you saw the market move up. So,
Yep.
You're probably in a safe spot. I would look for. I would love a 6140 failed breakdown attempt and then a reclaim and a move up. That would be super awesome. Just being completely non-objective here. The anchored VWAP from yesterday is it? Sorry, go ahead.
Look for a breakdown at 6145.
Yeah, so around that area, that's better because that allows me to get in sooner. Now you could have had it here at 6150 as support.
Yep.
But which was SPX 6100. Now, if we flip over to Periscope, it's actually negative GAM at 6100. So you could see that what we've just said kind of play out where you kind of have this kind of fueled move down and then it's a failed breakdown look. So to me, there's not a hurry, but if you want to scalp a few points here and there, probably not bad. If we look at the 10-minute chart, you're seeing a nice wick off of VWAP. Nice hammer candle. So the buyers did show up near that 6150 range. 5-minute shows a really nice hammer, but that could fill that wick pretty quick. You got the last minute of this candle. Looking at Bookmap, you are getting green bubble. Good.
Yeah, I was saying just what you said. We just did get a couple green bubbles, but could get a red one here. I don't know. We're going to see if it fights it out. And look, guys, even no matter what color these bubbles are, that does not matter on the chart because
right.
A lot of times you'll see a red bubble, you see a green candle, or vice versa, right? It's just tells you where the buyers and sellers are at. So that candle could be the opposite of whatever it is, so forth, but just kind of gives you an idea. CVD is holding up, Roy. It's 13, right at 1300. I don't understand that. It didn't really, it got up pretty high and dropped some, but that's right where we were at open.
Yeah, I mean, Tide is trending a little bit back up. The volume is kind of ticking back up.
Yeah, it was.
Well, it kind of moved down. Yeah, and it just moved down.
Market Tide is going up.
Yeah, market Tide's interesting. We're getting a more inclusive move here. Yeah, you're getting a kind of all ships are rising type deal.
Yeah. Well, okay, I just got $50 to take profit trader.
Nice job.
180 account.
Nice job. You got NVIDIA 151.23, Microsoft 493, Meta 712, Amazon 214, all green. Apple green 202, Tesla red 332.
Wow. Well,
Google
50 was the spot, right? 50 was the spot.
50 was the spot. Look at that.
Yeah. Got what, 7 points off of it so far? Oh, I got 2 points out of it. Yay, me. Yay, me. But 2 points are better than no points. Two points are better than no points.
I had to do a little fixaroo over here on my other computer. So I'm going to be kind of off to the side.
What are you doing, Roy? What are you doing?
Multitasking, unfortunately.
What are you doing that for?
I don't know. You know, I
Feel like it?
just yeah. I don't know if I feel like it, but we're gonna go with it. 30 products. I was gonna think of putting on the hearing somewhere again, but I don't know. I don't know if I want to deal with it again.
I went back on and looked yesterday to make sure you'd cut it off and it was over with. And you had, thank goodness, because I don't think it would let me do it. I did pop over and look because it was showing live on the dashboard, and I was like, "Crap, are we still live?" And when you clicked on it, it clicked off of it, showed it wasn't there anymore. So I was like, "Okay, that's fine." But you know. Man, if we could just go test this high, I would love that. CBD is at 3,700. As ugly as Tide was. Oh, I don't want to do that. Tide is not as ugly anymore. Market Tide is not pretty now, though. We'll see what happens here.
The man is about to talk, so you just got to be careful.
We did have a little drop right before he started yesterday, and then it popped on his opening statement. So I got a feeling he's going to read the exact same opening statement he did last night or yesterday.
Yep.
You know why change what's don't fix what's not broken, right? Ain't that the saying?
That is the saying. That's true. I have Pulte all over my feed today.
I am not going to look at what he has to say today.
He is asking for that resignation today.
Let's get through the hearings first, buddy. How about that? I don't think he's going to resign in the Senate today.
No.
He's not going to resign anyway.
Yeah.
Why is that not? Let me take it away. Oh, because it's there no longer. You got 60 order. You got orders sitting at 60. I mean, they are 144 orders, and you got orders upside. You don't really have anything downside till you get back to that 50 range.
Volume's curling down a little on Tide.
That is definitely something to watch. Yes, it is.
Periscope is still showing negative gamma where we're at, so it could fuel it up all the way up to 6120 as the next green came up. But that could, again, you're kind of in a no man's land with the man about to speak. But that does support your order sitting up above us.
Yeah. You got this green bubble. If they can push it up with that green bubble up to 60, that's what I would like to see them test that 60. Then, I mean, that 60.25 is what I really like to test. But we're getting a move down now, and the volume is going back up on Tide.
Make it make sense.
Well, we have these. This happens sometimes. Sometimes the market is just a little bit behind the Tide, and sometimes it's It's a little bit behind the market, so I don't know which one's catching which here. Don't like it's got a red bubble here next. It's not, couldn't follow that green up. We've had 3 pretty decent red bubbles and a green bubble and another red bubble. So that's not a good sign for a long, yeah.
Yeah, and you're so close to Powell here. Just careful.
Yeah, I'm expecting to pop up to that 60 level. At least get closer to it. It didn't quite. I mean, it got to what, 58, 58.75.
Yeah.
Which is not really testing it yet. So I don't know. CBD's under 3,000 now, 29, kind of bouncing back and forth a little. This is a pretty good size red bubble here. So we could get a push back down to that 50 level. Don't know, Roy. Don't know. That red bubble just turned back. I mean, green bubble just turned red and got another push down. CBD is down to 2,000. It's dropping.
Tied about to go negative on volume.
Volume has dropped.
Periscope showing negative gamma at 6,100. Increased negative gamma. So is that the stop sign or is that the jet fuel? Da, 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 da. See, we're outside the code.
$1 million question.
I mean, we could just be range bound, guys. It could be ping pong between 6150 and 6160.
Yeah,
Until the
it's
man
not
says something.
Yeah, I don't know, Roy.
It's a toughie.
It is a toughie. There's no doubt about that.
Yeah, I'm kind of hands off wheel right now.
I don't blame you. Don't blame you at all. It's not getting a move back up. We're not getting a green bubble behind this bubble, so that's not a good sign there.
You are testing orb low here.
You know, but 1 minute you're at the 200 down there. It went to the 200 to the T and bounce. That's twice. We've done that, so we'll see if it breaks that 200. I mean, I got a feeling it probably will. I'm not seeing anything that's showing support to 50.
Howie gave us a comment. I guess Trump's talking, saying he built military. That's the internet. He's not wrong on that. The government did invent a lot of that stuff, so he's not incorrect in that assessment.
Oh Lord, that's back to Al Gore invented the internet.
Yeah. They definitely keep us on our toes each day, don't they?
I did not realize. So I think it was Tommy Lee Jones actually went to Harvard. Did you know that?
I had no idea that.
He went on. It was a scholarship, like more of like an outreach for poor people. back today. And his roommate was Al Gore.
Oh wow!
Yeah, I saw that, and they were like you never guess who his roommate was. It depends on which publication you look at. Some publications said that they lived across the hall from each other, and then some publications said that they were actual roommates, like lived in the same dorm together. So,
wow.
I see Snoop's talking about NVIDIA that almost at an all-time high. Hood about to make a new all-time high. Hood is, anybody didn't watch, they're doing mortgages now.
Yeah, did you see the deal with it? Like, not just them entering the mortgage market, but then giving you, I think it was 0.75% below subprime.
Yeah, them destroying everybody else in the market right now. Yes, I saw that.
Yeah, no, that's Hood looks like it wants to take over Thinkorswim's gap that Schwab is.
If they could
pushing it.
ever get their platform on Thinkorswim's level, yes, I wouldn't mind going to them. But their platform sucks. It's a video game, is all it is.
Well, have you tested the new one, the Robinhood desktop, all that?
I've tried to get on it, and they won't let me get on it. So
Gotcha.
All it keeps saying is download. Like, all right, I download you where you're at. Like, I don't know. It was a hassle, and I gave up on it because it was like, you know what? It's not really worth it to me.
Well, it's money, right? You can't be messing about on stuff that is loading.
I'm trying to figure out. I know me and you both looked at them Tasty Trades.
Yeah,
I that.
I
think if I ever go back and start doing my personal futures account again, I'm going with AMP.
Okay.
AMP is it's a good looking platform, and you have one person that is pretty much designated as your go-to for questions or issues or technical issues and all that stuff. I really like that.
Yeah.
I mean, it really makes me like what they're doing. So I think that's my next goal, to do that. First of all, I got to figure out if I'm going to move. I've been kind of playing around with Tasty Trades a little bit. And Roy knows I've got a good bit of money over in Schwab, Thinkorswim. And I might just move it over there. I don't know. I haven't made my mind up yet. I'm leaning more to it every day. They've reached out to me a couple of times, like, hey, if you got any questions, I mean, like personal reach outs, like, hey, here's some videos to watch. I know they've called you once or twice.
Yeah.
They're like, here's some videos to watch. Here's some, you need any help with this. You can email me straight back here, or the voicemail says, hey, I left you an email to you. You can email straight back to that. You can shoot a text to this number, whatever is more convenient for you. We're here to help you. It's like, damn, they are either really wanting some business or they're just that good. I don't know.
I think it's kind of.
I love support. I love support. When somebody gives you support like that, it's kind of hard not to do something with them. But
Yeah.
FYI, I'm now $212.50 up in that take profit trader account now. And you were saying, I don't know, we might just chop around here. Be careful, guys. I was going long.
Perfect.
I know that makes a lot of sense, doesn't it?
We're still in our range. So if you ride the waves right, they can be very profitable.
That's the deal. Ride the waves right.
So it is. I haven't even really looked if Powell's really saying anything. New home sales came out. They were below forecast and below previous. So
it's just not unexpected.
Yeah. So you had a minus 13%. Expected was a minus 6.7%. Previous was plus 10%, almost 11%. So your new home sales are down. Your existing home sales that came out earlier this week were up.
So your new home sales, so units instead of looking at dollar amount, units, it is 0.623 million, so 623,000. Forecast was 693,000. Previous was 700, so it's down to just not as much as the month over month. Of course, month over month is a lot of you guys, if you follow us a little, you know how I feel over months. I think that skews numbers. Like that's Roy knows that when we talk about inflation, I hate month over month. I mean, that's what they use, right? But Elizabeth Warren ran it, well, of course, Pocahontas. I can't stand that lady. I think she is the worst of the worst.
I don't like her at all. I don't like gotcha politics. I don't like gotcha questions, and I don't like placating to a narrative that is not what you live, right?
Yes, and all that. Yes.
Yeah.
I will give credit where credit is due. I am not what's your name? Marjorie Taylor Greene fan at all.
Yeah. Yeah.
And this shows you that I don't really give a shit whether they're Republicans or Democrats because she's a Republican and I don't really like her. But I do respect how she came out and said that she is anti-war no matter who's doing it. And she kind of went against Trump a little bit on that. And I was like, you know what? And she admitted, she's like, look, I think this needed to be done. I just hate that we had to do it. Like, I don't agree with war, period. I'm like, you know what? It's kind of hard to disagree with that, right? Because I don't believe in war. I think war is horrible. I don't want to see any body get killed or hurt, any innocent people. And that's what ends up happening. Innocent people get killed and hurt.
Yeah.
In war, no matter how you look at it. And I know a lot of people, they were the whole, Israel-Palestine thing. I don't want to dig deep into it. But I think Palestine with a
nice job. I was saying real quick, nice job taking profit on that long. Cause
everything's looking nasty now, isn't it?
Yeah.
I just don't like when they focus, and this is both sides, right? This is neither one here nor there. I don't like when they focus on attacking innocent people, like when they attack hospitals or children or music festivals. And it goes to both sides. It's not just one side or the other. It's both sides do it. And it drives me absolutely crazy.
Yeah.
Worst thing I can ever see is when you see the bombings and you see the kids that are hurt. And, the media, that's what they're going to focus on because they want you to see. Mm-hmm. They're trying to get ratings right. So they're going to oh, look at these poor people, and I get it. And I hate they do that, but then I hate to see it. I can't stand to see kids suffer, no matter who they are, what kids they are. Yep. Kids can't help what they are, right? It's like animals. I'm got a soft heart for animals. You know why? Because animals can't help that they are where they're at, right? We put them there like dogs and cats and stuff like that. And everybody's like, I saw on Facebook there was a big argument, like, you people care more about animals you do people. Like, well, one thing, animals can't choose where they are.
Right.
Grown-ups can choose where they are, right? If an animal's neglected, well, an animal can't go to the store and buy some food or go get somebody to help them out, right? They gotta sit there and suffer or hope somebody does come along and help them out. So I don't know. That's just where I'm at. Trump on Iran conflict in. I dealt with both, and both are exhausted. Okay, that's the way to put a headline out there, buddy. Both are exhausted.
I think what you're going to have with the Iran-Israel stuff is that I think the U.S. is going to draw a hard line and basically say, we're not getting involved in this. You guys don't want to listen. You want to fight it out. And I think you're going to get a couple weeks of maybe a little bit of quiet period, maybe a couple days quiet period, and then something. Wow, this thing's breaking down now.
Yep.
Something will erupt. They'll start fighting. U.S. won't intervene, and then maybe a month later or so, there's going to be some sort of intervention. I think the focus will now be on trying to get this bill passed domestically.
So you just said both satisfied to go home and get out, and it said Iran and Israel could start again. Guess it could start soon. Iran has great oil.
Okay. So,
I like what he did yesterday. He came out and he was talking about, hey, we announced a ceasefire. As soon as we announced a ceasefire, Israel put drones up to attack and pretty much said that's a bullshit move.
Yeah, I love I know you had mentioned it on the stream. I had not seen the context of the F-bomb, but I watched it on the yesterday.
Yeah, there's a little more to it than what the media put on. Like the clip they were just showing.
Yeah. The 2-minute one is the good one. Yeah.
Yeah, he was trying to get a point across, and he thought the F word would help get the point across. And I get it. It got it across to me, but, I know most people don't appreciate that. So we'll just leave that out. Ooh, look at this negative CVD, brother.
Man. 1,600? Is that right?
Yeah. Look at Tide. I mean, everything is saying that we are going down fast, buddy.
So switching over to Periscope real quick. You could get down to that 40, like you said, 40 area, and you're getting this green. You're entering the green gamma, and look at the gamma that shifted above us. They actually increased their positioning at 6120. So this, like we kind of hinted, could set up a failed breakdown if you get a quick flush and then a bounce. So the bottom of our pre-market zone is 6141. I'm trying my best to be as patient as I can, but damn it, man.
I don't. You're getting a little uptick in calls now, which is very strange. But I mean, I guess it's here at the bottom, so we'll see what we bounce to first. I was kind of thinking that 50 might have been a spot, but maybe not. Got right up to VWAP there, didn't it?
Yep.
Could get a move. But Bookmap is not really saying that we're going to get a move back down yet.
Well, that 6150 held up again.
Yeah. That was a spot, wasn't it?
Mm-hmm. And CBD is now under 1,000.
I know. Yeah. As soon as you think you got things figured out, they're like, hold on. Wait a minute.
Wow, look at that thing really come negative 300 now. Going back to the Periscope, it did enter that green kind of start of it. I thought it maybe get to the middle of it, but it is showing that it's back above 6,100 on SPX. So just trying to see where support is. Clearly right now it's at 6,150. We did reject it or below and at VWAP here.
We're getting a red bubble here, and CBD is moving back down. Volume going back down. Yeah. Your put premiums are popping.
We could get a drop
here, Mr. Roy. Good. He's kind of toying with us on it. That's a big one. CBD's back under 1,000, 1,100. Ooh, then we got a little something shift there. I saw CBD pop up real quick. Wall Street traders continue to drive gains in stocks, pushing S&P closer to all-time highs. Yep. As Middle East tensions ease, while Fed's Powell get ready to wrap up his testimony before Congress bonds, and the dollar saw little moves. It's a big one right there. Bonds and the dollar saw little moves. That's the ones you want to pay attention to.
Yep. Yeah. Everything else is kind of noise. If those things start to move, then there's some validity in whatever's being said.
This damn thing is just holding 50, isn't it?
Yeah.
Was it 40 yesterday that we took so long to finally break above, and then it ran, and it's 50 to move down today? I mean, it comes down to test 50 and bounces every time. I mean, this is
every time. Tide volume has a little downtick.
Yeah. You're getting a red bubble here. 2 red bubbles in a row after that green. CBD is back under 1,000, over 1,000, however you want to say it. I can see 48 here, Roy. I don't know if we get much more than 48 if it breaks that.
I like your 45, but like you said, I don't know if we're going to get down there.
That red bubble, we got a green bubble right behind it. We got a pop here coming right back. We're kind of chopping around, but it looks like it wants to pop off this 50 level is what I can figure. I mean, we got 2 points off of it this time. But it's right there at the 50 SMA that it's not wanting to, it's kind of struggling at right now. CBD has went to 600, 700 negative. Now it's popping back up. You just make it make sense, Roy. Make it make sense.
Well, I mean,
This
range round, right?
This one candle's doing everything.
Yeah.
5-minute candle was a bitch. It went up, down, up, down, up, down, and it's still doing the same thing. It's like, I don't know what I want to do here, but I'll figure it out eventually.
Let me maybe get
right back up to 52. You are getting a little uptick in volume now, so that could be something to do with it here. See if it breaks above that 52 area. Well, nope, not yet. Trump, it's possible Putin has territorial ambitions beyond Ukraine. Whoa.
Oh.
Where'd that come from? That's out of left field. The market gives zero shits.
Okay.
We don't care what Putin wants. I loved it. I saw something the other day. It was talking about the Israelis and the Jewish population and all that. And if you look across what all the Jewish population, it's okay now for people to hate Jews again, which I don't understand why that's a thing. You can be anti-Semitic now when you couldn't be before, and everybody's okay with it now. I don't think you should be anti anything to any group of religion or ethnicity or whatever. That's just my personal thoughts. Oh, Trump said may sign an Iran agreement next week. Are we going to start getting oil from Iran?
Wait.
U.S. will meet with Iran. Are we going to get oil out of this whole deal, Roy?
No, I think you're going to get the same deal that he ripped up.
I bet we get oil out of it. Why would he say that Iran has beautiful oil? They have beautiful oil.
Well, I believe Iran has sold.
Yeah,
it does. I believe Iran has sold like all of their oil to China, hadn't they?
They sell 70% of their oil goes to China.
Yeah. So is he trying to dip into that? But then why would we buy oil from Iran when we were producing it enough here? Is what the other argument was. It could be a nuclear deal. It could be a weapons deal, right? He just rebrands it, the Trump deal.
I do hate how the left came out and, they slammed him for, I don't know if you saw, they tried to impeach him and they came out like, well, we can't actually impeach him on this. Like, no shit, it didn't do anything wrong.
Yeah.
I don't know why you thought you were going to be able to impeach him on that, but Obama, he had 583 strikes outside the country without congressional consent, and nobody blinked an eye at it.
Yeah.
I mean, Obama. That's just it's a double-edged sword. I hate on everything, right? I hate the double-edged sword, and it's both sides do it. I can't stand it. I think it's the dumbest shit ever.
Yeah. Well, they're tribal, right? It's a sports team.
Yeah. Well, we hit the 48.25, but didn't break down there. Right back up to 50 we go. You are getting a dip in volume again, but your put premiums are coming down. You're getting some ugly bubbles here. This is a pretty ugly big red bubble, even though the market moved up. This is why I'm telling you, gotta be careful what you're looking at, because this bubble is not pretty. Let's see where we were at before. The one right before that was very low volume. This one was 361, but see, it absorbed orders down there at this low. That's what you were looking at. Now you get a green. I am not ready to go long. I can promise you that, but I just don't know. Puts are falling. Put premiums are falling. But volume is ticking up ever so slightly. Market tide is pretty strong still. That was a move down that I thought we were finna get a break now, but that 48 held and absorbed those orders and bounced right off of it. So I don't know. I still don't love the move up. Well, we can see 55 there if it Breaks 55. Now this thing could run like a sun gun.
Tide is having the volume tick up, so could be a little validity. You are testing anchored VWAP here, pushing back to Periscope. You are reaching back into that negative gamma that could fuel it up. They have shrunk their exposure to 6120 a little bit, but
that big green bubble up there, 1,449 to the long buyers.
Wow.
Yeah. Compared to when it absorbed in here was 361, then you had 1449, then you get another green bubble here. This thing could rip, Roy. I think it's going to hit 55. I've been kind of hit a roadblock there.
Mm-hmm.
But we need to see a red bubble to see a roadblock there. That's a lot of orders sitting there right above it. Well, that candle started to turn red for a second, then turn green. So then red, then green. They're fighting a little bit here. Now we're getting a little red. Now, in order to get a move back down to the 50 range, we got to have red, then another bigger red. And it's just not, they're going to take it above 55. They're going to eat those orders up. Just took 80 of them out. And they put 40 of them. They put them, they're adding them back when they're taking them out here. So I don't know. Yeah, that was not a great sign there for the longs to break 55. Because every order they took out, they added back. Almost every order they took back. As fast as orders were coming out, orders were popping in to kind of build it. It never broke below 100. But now you got 100 sitting here at 52. If it breaks that, then we got 50. Again, is the spot.
I'm going to try and get our feed up. So
look at
1 moment, please.
Tide is going, volume going down. Call or puts are rising rapidly now. You're trying to do what?
I'm going to get the feed up if we want.
Oh, feed?
Yeah.
Oh. Whoa, Nelly. Whoa, Nelly. Whoa, Nelly. That's a big break there. Ooh, what the hell? And it held down there. You son of a gun. What the world was that? Back to your call premiums. Ooh, those put premiums are really rising now, and that volume is kind of turning sideways. Now we get a sideways tick on that. So that could have been our bottom run again. Trump, we're negotiating with Spain on trade deal. We will make them pay twice as much. Powell said fiscal policy can add to inflation, but I don't comment. We don't consider federal debt and monetary policy decisions. Well, you probably should sometimes. That would actually make good sense. Changes to forecasts partly reflect trade policy effects. You got a lot of stuff going on. That's still an ugly ass 5-minute candle.
Yeah, it is.
But
kind of like
big red bubble here. Big red bubble down here. Oh, okay. It was going to turn green, but it turned back red. So
they're kind of clearing orders too around us, aren't they?
You got that. It's 55 and 48 is where you're looking at. That's your spot right now. You look on the chart. Oh, yes, it's your spot. Oh, you had crude inventory come out. Cushion inventories negative 0.464. Previously negative 99. Inventories actual 0.46. Powell, I agree. Justin SLR would free up capital for banks. We got way too much stuff going on all at once. You got Powell speaking. You got the crude inventories came out. Gasoline inventories were actually down 2.075 million. Where'd that go? And it's forecast at 0.5. Wow, that's a big miss on gas. Big miss on gas there, Roy. CVD is almost back to zero.
Where is this hearing? I'm trying to find a link that doesn't have ads. If you do like the official stuff, it doesn't do ads on YouTube. Little fun fact. But if you go to like Bloomberg or somebody like that, it does.
Well, yeah, go to the official, and also I follow the official, but also get YouTube Premium, and you don't have any ads anywhere except
I do have it. I just
okay. You talking about in-house ads?
Yeah, I just don't have it logged in on this computer, and I don't feel like doing it. I'm lazy.
Oh, I got you. Well, you have access to Market Moves of Money, and it's premium.
That's true.
Actually, Market Moves of Money, Roy. You might have noticed.
I made the big links.
I was thinking the other day, I was like, why the hell is Roy's name not on here? Like, you're the one that came up with the name. I was like, we're going to add your name to it. Because there's two of us here. It's not just one of us. Most of the time. Next week might be different.
Yeah.
CBD positive 200.
All right, let's do this. Powell. That's CoinDesk, Reuters, Forbes.
Oh. Getting a bunch of green bubbles here, Roy.
Coming in hot. They're kind of clustered, aren't they? Yeah.
We're getting these green bubbles, but we're just not really moving anywhere. This is your chop, boys and girls. This is your chop. I would love a pushback down to 50. I might go long if we hit 50 again. I might go toward the 50.
All right, I'm going to go to this. We're going to present that.
You're getting a red bubble this time. See if it pushes it down or what it does with it.
So quickly say some of those are just flatly misleading. The idea of elevators, it's the same elevator. It's been there since the building was built.
Okay.
Characterization, and some of those are no longer in the plans. They've, that's earlier. The plans have continued to evolve.
It was one of the questions I asked my staff before having the conversation with you in the preparation. And assuming that your response would be to refute some of the things that were happening, was to ask the question.
I thought you was going to pull it up in case we wanted it, not just go straight to it.
Yeah, I just need to make sure. I don't want to move it mid-question. But, all right, so we've got that up and running. If we need it, I'll keep an eye on it over on my end to make sure he doesn't say anything crazy.
Oh, my gosh. I just saw somebody post this. This is actually really funny. Federal judge rules that Trump dropping an F-bomb without consulting Congress is unconstitutional. Hearings will start soon. I swear. I mean, I'm not a MAGA person. I'm not a 100%. I agree with some of the stuff Trump does. I don't agree with some of the stuff he does. I don't understand how what he did with Iran was questionable and how people can try to, there was no reason to try to impeach.
Yeah.
There was no laws broken. I didn't get that part. Like, where are we getting this from? How are we getting that we can impeach off this?
I think the mess up really from both sides. You can't label it a war and just a single attack.
You can't what?
You can't label it a war.
It was not labeled a war.
Yeah, he labeled it a war, a 12-day war.
That's technically, if you look at it, it was not labeled. The attack was not labeled a war. It was an excursion. I saw the official wording of it. No matter what he says, it was not officially a war. It was never officially a war.
I think that's the confusion, is if you say it as the sitting president on a platform that it's a war, we stopped the war, and it's a 12-day war, then you go back and say, well, it's not really a war. That's kind of the thing. You shouldn't impeach and do all that stuff, but you shouldn't also claim that it is that if it's not that.
Well, something
Right.
else. I mean, I know one thing for a fact. If this man, if he had doctors that came up with a cure for cancer, I promise you, they would try to impeach him for hurting doctors on making money.
Yeah, I mean, look,
He can't do
I
anything
think-
right to the left, and he can't do anything wrong to the MAGA supporters. I'm not saying just the right, because there's difference between the right and MAGA supporters, right? That's two different groups of people right there. What gets me is the left is, for the most part, I've seen some on the left, kind of more of your middle mainstream left, like, hey, I agree with the Iran stuff. I agree with some of the stuff he does. Personally, don't like him, and that's okay. That's the way America should be, right?
Right.
Like, personally, I don't care for the guy, but okay, I'm not going to condemn everything he does as bad, because he's actually done some good stuff. The problem you get is the anti-MAGA people are so anti-MAGA, they can't agree on anything, and that's what most of your congressmen and senators are, right? They're that Elizabeth Warren, that Nancy Pelosi style. They kind of moved everybody to that big group, which is horrible for America overall.
Yeah, no, definitely. I mean, this is the state of politics we've become. Is
I hate it. I
you
can't stand it.
You have to be binary, and you can't be critical, right? You can't be critical of the bill and be supportive of the president. Like,
We need to go back to old days. I don't know if anybody, Roy, I sent you all that video of George W. Bush on the golf course. No, y'all didn't find it amusing. I thought it was hilarious. George W. Bush is the GOAT in my book when it comes to one-liners. And when he's on the golf course talking about, we're going to attack, we're going to do this, we will not stand for that. Now watch me hit this drive, and turns around and just bombs it. It's hilarious, and I'm like, I missed that, right?
Yeah.
Just hey, I'm serious, but you know what? Let's all just have a moment and laugh real quick.
Right.
We can't do that anymore as a country, and it's just.
Yeah, everything is. Well, everything really is politicized to the nth degree.
Absolutely.
And it's just it's frustrating for guys like me and you that just kind of want to be critical or supportive without it being an incredibly controversial thing.
I mean, I supported the attack on Iran. I thought that was. I mean, we've done it before. This is not like this is something new we did this time. Like, hey, we're going to throw something out there. We're going to bomb Iran's nuclear facilities. There's no telling how many times there's a reason their nuclear facilities are so far underground.
Yeah.
Right? Because they get attacked all the damn time. There's no telling how many times we've done it. And Trump is he's on the Spain deal for some reason. Spain is going to pay. I'll negotiate directly with Spain. Okay. Fed Powell said, I'm pretty confident we will move on Basel III and SLR in the near future. I don't know what either of those really are, so no comment from me on those. You know what Basel III or Basel III and SLR is, Roy? No. I know SLR is some banking regulatory thing, right?
Yeah, it's SLR meaning, isn't it strategic lending? Finance.
Snoop, join
statutory
statutory
liquidity ratio.
Okay.
That was that buzzword yesterday that he said that dropped the market a little bit. Supplemental leverage ratio is the U.S. implementation of the Basel III Tier 1 leverage ratio, with which banks calculate the amount of common equity. So this is basically they must hold relative to their total leverage exposure. So large banks must hold at least 3%. Top tier bank holdings must also hold an extra 2% buffer for a total of 5%. The SLR, which does not distinguish between assets between risk. Yeah. So, look, a little pop here.
Yeah, right down. Got close to 50. We got down to 51.50, and now we're testing 55 again. Oh, what just happened there?
Oh, Kennedy's talking. We got to listen to this guy.
Did I hear that correctly?
There may have been
boy.
some lost in translation
I
there.
understand. I was a little late. Tell me what tell me what the bond market's telling you.
Bond market's fine now,
Good
functioning well. It's pricing, it's reacting to economic news. There's adequate liquidity. Rates have come down pretty significantly from where they were a couple months ago. So I think I think inflation expectations have come down a bit from April, and in general, the bond market is functioning well.
Okay. Explain to me why we have seen in the last few months weakness in the dollar.
That's a great question. And of course, the Treasury Department has the job is responsible for the role of the dollar. So I don't know. I think I would go back to the thought that markets have been digesting an unusually challenging set of circumstances, and have reacted the way they've reacted. The dollar's kind of stabilized now. In fact, it's moved back up here in the last couple of weeks a bit. And there are plenty of people who are still writing that the dollar is still overvalued. We don't have a view on that, of course, but I wouldn't really have an opinion on exactly why it is where it is.
Well, clearly there's a lot of geopolitical risk right now, which would lead one to conclude, all things being equal, that people would be flocking to the dollar and it would be stronger.
Well, you have seen some of that here in the last few days. But again, I don't really have an official view I'd like to share on that. I think there are possible explanations, multiple possible explanations. Again, one of which is that some people still feel the dollar is highly valued, but we'll see.
I want to talk for a few minutes about tariffs and inflation. What does history tell us about tariffs and its impact on inflation or deflation?
So the thing is, we've been through a long period in which tariffs were going down. Remember, since World War II, really, it's been a process of lowering tariffs globally. So there just isn't a lot of modern learning on that. I think people look at the incidence of tariffs during the president's first term, but those were like 1/6 the size of what's people are estimating now. And they do find some effects on inflation. But remember, in 2019, when those tariffs were put into place, the economy was slowing. We actually cut rates 3 times. Inflation was running at 1.5%. So it was a very different time. This is different. I think one of the reasons why it's so challenging is that there really isn't a modern precedent. And I think we have to be humble about our estimates. And we are very open to the possibility that transmission through into inflation will be less than we think, or maybe more than we think, which is why we're in a position of wanting to take our time and make a smart decision as we see how this unfolds.
Well, obviously the size of the tariffs makes a difference, does it not?
It does.
And we don't know yet the size of the tariffs.
We don't. And we don't have a view on any of the merits at all. That's not our job. Our job is inflation, as you know, and maximum.
Will it also matter? Let's assume that there is upward price pressure. Would it matter how much businesses decide to pass on versus just eat? Does that make sense?
Yes, that matters. That is what matters. The question is, who's going to pay for the tariffs? Originally, it's the importer, but it gets passed along through the distribution chain to some extent to the consumer. The ultimate question of it is how much of it does show up in inflation. And honestly, it's very hard to predict that in advance. So we're watching to see, what shows up in measured inflation.
If the president's trade negotiators pursue reciprocity, which I define as both sides reducing, in a quid pro quo, reducing tariffs and trade barriers as much as possible. Ideally, in a perfect world, we would end up with 2 sides with zero tariffs and zero trade barriers. Would that be inflationary?
No, not at all.
That would cause the economy to roar, wouldn't it?
I think it would be.
Yeah.
an
Okay,
outcome.
thank you, Mr. Chairman. I appreciate your endorsement, Mr. Chairman, of the reconciliation bill.
Thank you, Mr. Funny, Senator Kennedy, I didn't interpret his comments that same way. I would also say that, one, thank you, and we echo what Senator Reed said, thank you for your independence and doing the job. End of the day, I think tariffs are a tax, and they're going to hit. They're going to hit, I think, starting next quarter. And again, I think the reciprocity argument, that would be a nice goal. I guess I hope we can then explain to the Australians, who are a strong ally of us, who we have a free trade agreement, so we don't have tariffs, who we have a trade surplus with, who I'm hoping we're going to be able to build jointly submarines,
All right, Roy.
why they.
It only takes so much.
Yeah, I can listen to Kennedy some. He's funny, but when we start getting into, we're talking about Australian.
It does poke a hole in the whole deal. I mean, you got to have either reciprocity or you have deal. What are you trying to negotiate for? And I think that's Kennedy's been his stance. He was hard on Lutnick a couple weeks ago on that.
Well, we went up almost to the high day. Now we're working back down some. CVD is still elevated 2,700 or so. I mean, I'm still looking at that down. If we can break this 55 area here, I'm still seeing 50 as kind of the spot to go back to. Now, 55 might hold now. I don't know. That's neither here nor there.
You're getting call premiums dropping hard.
Yeah, and volume is dropping with it. Led said that he thinks that Trump walking off the stage risks of something unexpected stop, so that's why the market popped. I don't think it's that simple. I think it's got a lot to do with that. Don't get me wrong, but I also think it has some of Powell's answers here or there. I think anytime you say something that's positive, you know Kennedy's going to kind of spin it a positive way with him, because one thing about Kennedy, either he's going to spin something positive with you or he's going to make you look stupid. And when he makes you look stupid, he makes you look stupid. You know what I mean?
Yeah. Yeah. No, he's a cordial gotcha type of guy.
Yeah.
he
kind of moves you into it, and then he's like, okay, so let me get this straight. You believe this, and this, and you're like, shit, did I just say all that? Yeah, you did.
He's very lawyer in his approach, I would say.
I still think the funniest thing he's ever said, though, when he said that AOC was the reason they put directional shampoo bottles. And said it with a straight face. I'm talking about just come straight out with it. And everybody's just kind of looking around. You know, it was all those other senators around him. They're just kind of like smirking, looking around. And he did not crack a smile. Just kept on going. That was just hilarious. And I look at Miss Cortez as she's the leader of the Democratic Party. I mean, hell, she's the reason they put directions on shampoo bottles.
Again, having a good time, right? Funny.
Yes.
You can't question his intellect, right? He's a smart guy. He's well respected among his peers. He can attack without being nasty, name calling.
He does it just so
Southern gentleman, like, if you will.
So nonchalantly, it's like, hey, that's what you think? You're wrong, but okay. You know?
Like, I just picture him enjoying a pimento cheese sandwich every day at lunch.
Absolutely. There's no doubt he eats pimento cheese sandwich every day at lunch. No doubt in my mind.
We are getting support at VWAP still. Ooh. We are below 55. Tide volume is going negative more. Puts are rising. Calls are dropping. looking at your 1 minute chart, you're getting an aggressive move down. I am in a short again at that 59 level on a combine because I somehow have lost my balls the last 2 days. I would love 61.50. I don't know if we're going to get down there, though.
Yeah, so I don't know if you see what Snoop said. He said, I just need to revisit back to 61.40. Like, oh, bro.
Whoa. Could happen.
Look, we got 246 orders sitting at that 40 level.
Yeah.
But you got 174 sitting at 50 with 103 at 51 right above it. So they're kind of protecting that 50 area. If we could get a break at 50, yes. We could see 45 and 40, but you got 224 orders sitting at 45 with 150 sitting at 46.
So we are getting this kind of cascade of red bubbles, though. So obviously momentum is shifting down. Periscope does show you did have more positioning add to that 61.20 level, less red exposure at 6100. We are at 6101 on SPX. So this has been like 61.50. It's kind of just been support. So looks like we're wicking off of VWAP here and orb low. We are still in the orb channel. Now again, chop, chop, chop. But you can ride the waves. You can do pretty good.
CBD is 1100. We are getting a green bubble here after all these red bubbles we had in a row. So this means that we're going to get a move back up to 55 at least. We got a pot right there to what, 54.50 before it decided to come back down. It's I hate to say this is going to sound bad, but it seems to be showing a little weakness here. But you say that, then you had that hellacious big green pop a minute ago that we have taken pretty much all of it back out. Roy, 48. Now you got 220 orders sitting at 50 where it was 170, so they're adding to it. 50 is the key. If it can break 50, we should get a really quick move down to 46, 45, in my opinion.
Mm-hmm.
But that is a big if. Big old if. Big old if.
SPX continually holds 6100s at 6101.60. So it just can't quite break down, but it is now. Looks like it wants to. Looks like it.
Yeah, I'm looking over at Tide. Tide is not pretty for long. When you're getting a little curl up on your premium call premiums, but your volume is still going down. Bookmap is giving us a green, and a red. Now it looks like it could be another red. Let's see if they can close this one red. I just don't know, Roy. I like the breakdown, but I just don't know if we're going to get this 50 break. That's the only deal. If we get the 50 break, I see a 10-minute bear flag or forcing myself to see it. I hadn't looked at the 10-minute. Snoop, let's look over the 10-minute. I guess you could call that a bear flag. That's
stretching. That's a guy in a short that wants it to work out.
That's kind of what we talked about before. If you see what you want to see.
Yeah, I mean, I would love to go with it, but I can't pull up that chart and say that's a bear flag.
I mean, you can kind of see it to a point, but then you're like, okay. I mean, that one wick kind of changes that whole scenario.
Yeah,
that big camera.
Now you could probably make the argument on this guy. No, you can't. There's just, I mean, you got a bear flag on the 1 minute. There you go.
There is a bear flag on the 1 minute. Yes, kind of maybe. But these don't play out near as much as your higher time frames. I mean, look, it's still a thing. If we break 52, then it goes to 50. 52 first break you need. You get 52, then you go test 50. You break 50, we go to 45, possibly 40. That's it. That's what you're looking at. So there is the ADX indicator. Ooh, we just broke 52 there. The ADX indicator is telling us this is not a strong one. Well, that's more of a I'm looking at what Snoop just posted. He posted it's more of a
Triangle.
Triangle, yeah. It's just not. I don't know. I mean, we just did what I thought we would do. We broke 51, right? I mean, broke 52. We came down. They couldn't go any further. You got all these orders at 51 and 50. And look at this bounce. Are they doing this to get a move down on this? I don't understand. Your calls are still dropping. Puts are sideways. Volume's still going down. You are getting a green bubble here. It's going to take some force to break. I like that, Roy. Roy commented on our little message group over here. I'm going to say it for you. You're doing chart yoga. Yes. You are trying to make something out of nothing. And, of course, look at this bounce off down there.
Yeah, it's chop. I mean, it's just you got too many news headlines going on.
Shooting for a homer. Wow, 61-37. Wow, that's shooting for a homer.
You got too much headlines hitting. I mean, the market is being held. The fact that it's holding up here, because don't forget the move of the last 2 days. The fact that it's just holding up here is a pretty bullish sign. So to think that it's just going to collapse, I mean, it could.
I don't really agree with
possible.
I don't agree with Leah there because I'll supposed to continue to move up without some unexpected bad news. Tough game to be short here. I don't hate the short just because I think we're so far up here. Now this is not one of those that hey we're going down just because we've been up so far. I'm just seeing some pressure in the market that I hadn't been seeing the last couple of days.
Mm-hmm.
Is the only reason I'm thinking that we could get a move back. I mean, I'm gonna be honest with you guys. We need a good move back. A good move back would benefit the market great going forward. This market can't just go up, and I know consolidating and doing this is a different story. Let's look at the 5 minute here with the ADX on the 5 minute too. Yeah, ADX on the 5 minute is horrible. It's showing it's 13.49. So there's no trend, which we kind of see there's not really. I mean, overall, I guess you would say you could lean slightly toward a downtrend, but this is all consolidation. If you can swing over to mine real quick, Roy.
Yeah.
My chart here. See all this? Breakdown, break up, break down. There's your, I mean, that's probably your orb too, right? Or close to it. Well, there's your orb. But I would actually use this as an orb. If you want to go short, you need that 50 break to go short. You want to go long. I think you need the 60 break to go long. You can trade it in between it for sure. But, I mean, it's just I don't love what Bookmap. I mean, I don't love what Tide's giving us here as far as wanting to be long. I don't love Bookmap. Those orders sitting at 40, I just, for some reason, I keep thinking those get hit today. I don't know when they get hit or if they actually do get hit. I just think that there's a good possibility they could get hit. Your bigger orders are to the downside. You stacked at 50, 45, and 40. Really, you're just stacked at 60. And then I guess there's a little stacking at 65 and 70. So, like I said, we'll come back. If we can break 50, right, that's the key. We got to break 50. We're at 52 now. So we got to break 50. If you can break 50, we could actually see something decent here. But I don't know.
Bookmap bubbles are headed that way properly. I mean, these aren't They're pretty average sized bubbles, but they're not tiny, so that's good.
Yeah, I mean, it's kind of what's got me leaning that way. But like I said, this is, I'm not going to lean that way hard enough until we break down below 50. Let's see here. Which one?
Here's your 52 retest Periscope. SPX at 6,100. So you're getting kind of this check right in the middle of the cone. If you're looking at Bookmap, you've got that bar lighting up right there at 6,150.
Yep.
What's CBD at? I can't read it properly.
545
possible.
530. Yeah. It's positive 5. It's dropping 490, 480. Looks like we're going to get this 50 test here, possibly. I don't know what we do from there. Well, we got, what do we get to? We got to 50.25. 50.25. If it gives us a green bubble next, it's going to pop back up. If it gives us a red bubble, we got a chance to break it down. That's just where we're at. Put premium is shooting up, though, Roy. Put premium is popping up pretty good here. I don't know what's happening with that. Volume is going down. I look for maybe possibly to get the break here.
It's your test of 50.
Yeah. Is it going to break it down this time? Here's your question. Oh, they're going to break it down this time, Roy. They got orders right below it. It's fixing to move.
No, popped right up.
Yeah, there's no, they put orders there, but they're eating them all up. There's the thing about it. If you're looking at Bookmap here, you see those big red bubbles?
Yeah.
That's absorbing. Now, here's what you could have happen here. Is it taking these big red bubbles, the next green one could pop this damn thing pretty decent. I don't know. There you go.
Oh.
You see what my response to him is? Snoop and Led are talking back and forth. Like, if you just watch the stream, you get all the information you need. Like, we're telling you here what's happening as it happens. Right, Roy?
Exactly.
I mean, come on, guys. Like that, yes. We're using this thing called Bookmap. Good job. CBD has gone to negative 2,000.
Put premium shooting up, volume shooting down. Oh, duty now.
Snoop's got a thing. I'm in an attic right now looking at a furnace from 98 and about down there. There you go. While you're trading, love it, love it, love it.
You are getting that green. You are getting that green bubble here. It is reclaiming 6150. Is that a fake out, right?
Yeah. 40. I still like 40, Lord. I still like 40.
Yeah, I like 40. as a failed breakdown spot. Honestly, I want it to test it, reclaim it. I think that's the spot.
We got to get through 46. We get through 46. We could see 40. Hold on, I'm moving orders around. Sorry. 46 break. Then you got 45, and you got 44. They're stacking these orders here, so I don't love that. But
we're at the 200 on the 5.
Yeah.
Periscope, we are hitting the first level of support. We are below 6,100, so it can just kind of work its way down, and it's going to find some support somewhere. So be on the lookout. As you can look at, there's your 5-minute bounce right off the 200, but your anchored VWAP from yesterday is now 61.42. So that's good to know. We had a lot of activity yesterday, so your average buyer is still green.
All right, Roy. I got to run the restroom real fast. Yep.
Yeah.
2 seconds.
Oh, 2 seconds. No problem. I've been holding it for 2 hours too. Risked it listening to Nick Kennedy. Yeah. While he's away, we're looking at Bookmap, seeing if it can hold up. Let's see. See that red really forming at that 61.45 area. So tide is very nasty. See if I can get that over to you guys so you can see what I'm seeing. So looking at Bookmap, you're seeing a little bounce here, there. There's your tide. You see the SPY tide shooting up, kind of leveling off on the puts. Your call premiums ticking up. Your volume's still negative. Maybe a slight tick up if you want to split hairs there. As long as you hold this, you're looking at it. Look for a bounce. I would say you probably get down here, fail breakout, move up. There's your retest of the 200 as it's pushing down a little bit. Interesting note is oil is up 1.7%. It has been beaten to hell from its highs on Sunday, but oil is green. Gold is now green. VIX is getting close to being green, only down 0.5%, which is only 10 cents. Mag 7 continues to hold the fort. Tesla dying. You may want to close your calls. They're looking good. 325 now on Tesla. Look over at Bookmap. You're starting to see that support build up at the 61.45.
Oh, honey. Oh, honey. honey. Ding. That was $425 per contract.
Nice job, man.
I thought I was done for taking that stupid trade. This last time I was like 50. Oh, they were $530. I did 4 of them. That's $2,000. I'm like, oh, that's a nice little payday there. And I did it. And then Royce did that. Was it yesterday? When you're like, hey, what the hell? We got it's 250. So I was like, oh shit, let me look. And I was Monday. So those calls I sold for $5.30 a piece were at $13.20 a piece.
Yeah.
And I was like, holy shit. Well, I had 50 extra. One is like, I'm going to put a sell order in for these 50 extra I got just sitting there because I can't do any
covered
option trades off of it. So I went on and sold those, made good money on those. And I was like, well, shit, now if it takes me out of all of it, but you know what? I got a lot of money coming if it does. So as much as I didn't want to lose them, I had made peace with, you know what? I'm going to lose them. It's okay. I'm going to make a lot of money. I'm fine with it. And then just looking now and seeing that, the excitement that just went through me. So now, I mean, I've got a lot of money because I sold those. I sold 40 NVIDIA.
Yeah.
at their highs. I'm like, you know what? I got money to play with. Let's do this and keep a few 30K or so on the sideline to we see a play, lead throw something out there I might like that. You know, I've traded that MSTR deal with y'all a couple times, right?
Yeah.
But I was only going like 5 or 10. I wasn't really going much. Now I can get, I could buy a lot more than 5 or 10 with it. So
yeah, I mean his course play is looking good.
I'm really proud of that one because that's one I know I knew absolutely nothing about, and I charted that thing out. Yeah. And then I told him, hey, I would wait for 1137 if it was me. And did the damn thing bounce right off 1137, Roy?
Yeah, got damn near it. Give or take 10 cents or so.
That's I like that. That makes me proud when my levels hold up. So, by the way, I'm $300 up in this Take Profit Trader account now. Thank you, because I did hold a short forever.
Nice.
Actually, would have been out more, but that one pop-up candle, it hit my stop, and I re-entered. So I should be about 500 up in this account, but it's okay. It is okay. One damn wick. But I'm all right now. I'm happy. I'm content here. I would like this thing to break down 240. I'm holding on a short in the futures desk. I think I'm going to add to it here below. If it comes back up and tests the 200, I might add more to it. But Snoop, this is the last time. What we say, 45 to 40?
Yeah. 40 being the spot, in my opinion. All that other stuff. I mean, tide is
if it breaks 40 now.
Bearish.
Yeah, I mean, it breaks 40. You got 35 next is the play. And I guess I can go on and cancel this order I was going to put there. Yeah, Roy, I agree with you. What a move. This goes back to the point. And this is no shot at lead. This is what a lot of people think. When Led mentioned on the thing over here, consolidation to continue to move up, finding unexpected bad news. The market has had really good news the last couple of days. It's always kind of went crazy, right? We had the ceasefire stuff that really was a ceasefire, was not a ceasefire. Who knows what the hell it was, right? You've had some other positives come out for the market. So the market's just kind of been just trending up. Powell did not get beat up, and I don't know if he's still speaking now, but he has not gotten beat up in either one of them, really, right? Oh, you might want to watch this guy. This guy, if it's who I think it is.
Moreno.
Let me look. Let me see him.
That's something that factors into your conversion,
that's
your thought process. In other words, we have full.
That's not who I thought it was. Powell hadn't been beat up. Of course, now he could be getting beat up now. We're not watching. I don't know if you're paying attention to it or not. But the market's just been kind of steady. Let's look back, right? Let's look at a 4-hour chart. 4-hour chart. Let's hide all this. This is the market the last month, all of May and then into June, right? Yes, we had dips, but overall the market is on a uptrend. There's no doubt about that, right?
Right.
You see, once we start a round off, we get a little pullback, round off, a little pullback, round off, a little pullback. It's doing the same thing, right? Pullback. Well, what are we getting here? We're getting a little round off, right? So I would expect a little pullback. Now, it might just be to 61. Might not be much of a pullback, but I expect to see a pullback here and then to continue to move up. This is actually healthy moves for the market up. right? The market is, we forget this all the time. The market is designed, it is made to go up. It's the reason the market is there. The market is there to grow value and to reward people that are in it, right? That's the point of it. If it was not the point. And that's why everybody tells you invest instead of trade, right?
Right.
If you invest in stuff, you just leave it alone. Eventually, yes, you're going to have really good money. In most cases, you're going to have your one-offs that, hey, if I did this 10 years ago, it'd still be worth the same. I know. But if you invested in SP500, NQ, stuff like that, the QQQ, SPY, you, in the last 10 years, you have grown exponentially, right? You've grown so much, it's crazy. Because the market is designed to go up. But the reason the market can go up is because you have these healthy pullbacks. Even if you have a bear market, right? That's still good overall for the market because it resets and gives people opportunity to get back in at a cheaper price, then move it back up. That's why we have what we have. That's why it works out that way. You'll see it better. Let's look at the daily. Look at this. You had this big dip, right? This would be what Snoop Dogg would call the Uterus recovery, right? But look, pull back, round, pull back. This was all, I forgot what news is going, what was going on here. Why don't we get
Tariffs.
This
Tariffs.
Tariffs, yeah. But look what we've done since the tariff stuff, right? Come back, dip, come back, dip, come back, dip, come up, dip, come back, dip, up. We should see a little dip, then back up, right? And then next thing you know, we are at the high of 6,300 or so, right? That's just what we do. We're in just a little micro, right? That's why we look at charts like this. This looks completely different than the chart we were just looking at, right? Of course it does. But to say that, this is what we're looking to trade only. We're not looking. But if you're looking to invest, that's why I tell you, if you're investing, look at a 4-hour and up. If I want to see a good spot to go long, you can see right here, once we dropped, made lower low, lower low, lower low, boom. What's this one right here? It's a higher low. Higher low. So it could come back, expected to come back to, I'm saying maybe 6120, 6100. It makes a lower low pop. We're making higher highs now, right? It's just, I don't know. I think we overthink things way too much, and we don't have to. That's kind of my point with everything. Sorry, the ramble.
No, you're good. The trader's mindset, the swing trader's mindset. It's important to know what you're using as your instrument, because they are just two different worlds.
Absolutely.
Two different worlds. I mean, that's something I've struggled with, is putting a trader's mindset or a day trader's mindset into a swing trader. You just can't do it. I mean, you gotta give yourself time. You gotta let this stuff play out. You can't be shaken out so quickly.
That's why when I do orders, when I do my my long-term stuff, I typically set all my orders after hours. Like when I go in and I look and I set orders, I set where I want to buy, where I want to stop loss, all that stuff is set, right? And then I don't look at it like until Roy says something, right? And then I look at it or something like that. I try not to stare at it every day. I try not to look at it every day. Set it and forget it is kind of my goal on that. And I had these options I really need to get out. I don't have any options right now. I do need to look at maybe selling some eventually, but
only on green days.
Yeah. So, I mean, it's just, I don't know. This is where we're at. And I'm trying to walk a fine line between being a day trader and then being a swing trader. I need to get better at swing trading. I mean, you look, how long have I had these Tesla and NVIDIA options, or in SoFi and Apple and all the stuff I'm holding? It's been forever, right? I add to it. I finally sold some, but I had to sell some. But if we dip, I'll buy them back up.
Yeah, I think you've been doing the covered calls now about maybe 8 weeks, 6 to 8 weeks.
I know we started when I went. It was April the 23rd. whatever April 20th, whatever that Friday, that was that first week I did them.
It's about 8 weeks.
May, all of May, and then June.
Yep.
So yeah, 8 weeks, 9 weeks. And I had them before that.
The thing about it, that strategy that I've loved so much is you've gone way out of the money, wrote the calls, and have been able to ride this up and still keep your shares and pocket the premium because you went so out of the money. You weren't, blinded by the big premiums earlier, closer to the price of the stock, which is easy to do, right? Like you could write Tesla right now for $5,000, but your shares are going to get taken away, right?
Right.
The fact that you've probably amassed more than that in the 8 weeks and you still have your shares is pretty amazing.
We've been close a few times. I remember we had a Friday. Friday had to close to come back down for me to be happy, and it did. So
yeah, I remember that.
I've been taking profit a little bit earlier on. If I get 80, if I get 90%, I go on and buy them back. Right, and like, hey, you know what? I'm buying these back. I'm good.
Yeah.
That way, I don't have to worry about losing them.
And you've just accumulated cash along the way.
Yep.
So that is how you make money in this game.
That is the plan. That's what we're trying to do. So now, if we can build this strategy out and move it to out of an IRA account, so I can actually take the money out of it.
Yeah.
That would be lovely.
Yeah. This thing wants to break down. If we're looking at book map, kind of this wacky consolidation. I mean, you still got probably another hour and a half of Powell.
Yeah.
So you don't have much pushing. You did break the first level of support. You are down to your next one is 60.90. No real gamma changes have happened. You've got decreased gamma up above. We scroll down. You can kind of see we're in this pillowy soft spot entering. So doesn't mean it can't still go down, but it is in a spot where it may be a little bit more difficult for it to go down.
Got a lot of orders there. 44 got a lot of orders.
Yeah. So this could be the kind of hangout mode. What was our rule? Didn't we have a rule yesterday? We did.
Our rule 6 would be it's time to cut it loose because it's after 10 o'clock. We're almost 10:30. Rule on the bubbles?
No, wasn't it like a time? Was it 10? Go long?
Oh, 10 was go long. Yep.
Yeah, that wouldn't have worked out. Oh, maybe it wouldn't have worked out.
Means we're going to get it now.
Yeah.
Yeah, there it is. Yeah, you get you're talking about your European close, yeah. Usually almost every day at 10 o'clock or right around 10, you get a pop. So when they finally close all their shop up, you get a pop up. And then typically that pop is not sustained all the time.
Mm-hmm.
But you're getting a big drop in call and put premiums here. Volume is kind of going back. I think that could be just a quick little hold on a second move. You know what I mean?
I know what you mean. You know what I mean? You got a lot. There's a lot of shit. Sorry, going on right now.
You just tell me what you say.
As a PBS NewsHour, I'm trying to get this stream on this other tab. There's Pam Bondi's testifying. You've got a judge he's doing his hearing to be confirmed. it's all over the place. All right, I'm gonna get this ready if we want to continue the stream.
Doesn't matter. I mean,
We'll do it. It's nice
Okay.
SEO. See if they stick around, and then I'll be around to turn it off. So let me get that set up. Anybody got any questions? We've got a lot on.
we covered a lot
Twitter.
of stuff today.
We definitely did, and I definitely got to pee. So I am.
I couldn't take it anymore. I don't know how you stood as long as you did. I couldn't do it anymore.
Yeah. All right, let me get this set up, and while I'm doing that, I'll keep an eye and see if this thing breaks.
Thank you, Roy. Catch you guys. I will see you guys tomorrow.
Bye, guys. Thank you. All right. Got it working. All right. Cool. Take it easy, Bonnie.
Yep.
That impacts your thoughts. I mean, how do you counter? How do you bring into account these disinflationary trends that I've just mentioned?
So we do look at the overall picture, and that's actually what's been happening is services inflation's been coming down, and that's been covering the what we see so far, small increases in goods inflation. I would also mention a factor that you didn't mention on your list, which is regulation, which is an area which could also be over time disinflationary. Yeah. So we get that. I mean, I try to say that it's the broad sweep of policies and the broader economy that matters for inflation. I get asked about tariffs a lot, and that's the one where all forecasters are expecting, a significant increase between now and the end of this year. We don't know how big it's going to be. We don't know when it's going to come, but it's just something that we're waiting to see more information on so we can make a better decision on interest rates. That's all it is.
Well, I hear the discussion about not knowing the magnitude and the timing of the trade talks and the resulting tariffs that will ensue. It does seem to me that there's a bias toward viewing this as more inflationary than deflationary. And I'd like to ask you this. If Ambassador Greer is successful at bringing the trade deals together soon and alleviating that uncertainty, what would that do to your perspective on rates? Would that put you in a position to think more aggressively about lowering rates?
Yes, potentially it would. I mean, really, it's reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. And I think that's the path we're on.
I think that's welcome news. I think the markets will welcome that as well, because I do believe that we're on the path, as you're about to say, of having some significant resolution in trade uncertainty. We've lived in an unbalanced world for years, with the United States has had the lowest tariff barriers in the world, and other nations have taken advantage of that. Jameson Greer and this team, Scott Bessent and his team, the president, everyone is making a concerted effort to fix this. So I'm looking forward to that. One other area I wanted to touch on, because it's touching close to home, and that is legislation that this committee has just passed out and that we've just passed in the Senate. That's to do with the Genius Act. We just passed it last week, and it provides an urgently needed regulatory framework for payment stablecoins, and it requires that they're backed one-to-one by cash or short-dated U.S. Treasuries. Over the last 5 years, the total value of outstanding stablecoins has increased from approximately $4 billion to over $2 billion today. One market participant has predicted that if a framework like the Genius Act is adopted, total issuance of dollar-pegged stablecoins could reach nearly $4 trillion by the end of the decade. So I wanted to get your perspective again, Mr. Chairman, of what impact would this new source of demand for bills have on the yield curve? And in particular, what impact would it have on short-term rates?
So more demand is going to have a tendency to drive down rates. I don't really have a sense of how big that effect would be, of course. And let me just say that it's a great thing that we're making progress toward a stablecoin framework.
Thank you, Mr. Chairman. I couldn't agree with you more. The direction clearly is that it's going to drive rates down. I think it's very positive for the economy, positive for our cost of borrowing as a nation. And I appreciate your response there, Mr. Chairman. Thank you very much.
Yes, sir. Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you. Thank you for being here. I want to follow up on a question from Senator Warner about data deterioration. I'm concerned about that as well. That the Trump administration, I'm watching as they've ended dozens of research studies that business and government leaders rely on. So my question to you, are there specific research projects that the Bureau of Labor Statistics provided that they no longer do provide, that the Federal Reserve researchers cannot replicate on their own or through other sources? And
I'm
if-
not aware of any.
Okay,
That doesn't mean they don't exist, but mainly it's the regular data they supply. And as you know, they've cut back on the size of that survey.
right. So I would hope as we move forward, and not just in today's hearing, but if there is some other data or you're relying on data that you're not getting, or there's now another source for that data, I would please share that with the committee. Thank you.
Yes.
During the Biden administration, the Federal Housing Finance Agency and the Federal Reserve worked together to improve access to the discount window for banks. What is the status of that collaboration with the FHFA?
I can't speak to the FHFA. I can speak to the fact that we're really looking carefully at modernizing the discount window and making.
But we're
the
not there yet?
investments. No, it's going to be this is a project that will take some time. It's the discount window needs to be updated and refreshed from a technological standpoint so that people can access it readily and that kind of thing. It's still a little bit behind the age in that respect.
Do you have a time frame that you're looking at to,
I'll get back to you. It's
Okay.
something we've been working on.
or is there a
hard.
funding impediment that is also
No.
addressing this?
No,
So, okay, if you could.
We're moving
provide-
ahead with it. I'll come back to you
Okay.
on that.
Thank you. In March, the Federal Reserve, together with the FDIC and OCC, announced that you all intend to repeal the 2023 Community Reinvestment Rule, Reinvestment Act proposed rule. I prefer the proposed rule as it would better address the needs of states like Nevada that don't have headquarters of large banks. How will you ensure that the new CRA guidance improves access to financial services, to loans, to investments in underserved rural and tribal communities?
So I think in March, we announced that we're putting out for comment really a proposal to withdraw the proposed guidance, which
Okay.
had been the subject of litigation. And in the meantime, we're going back to the old CRA rules. And I think that's where we will be. I don't have anything more in terms of what we might change with respect to those old rules, but that's where
So
we
the
are.
default are the old rules,
Yes.
and those may be.
CRA as it
used
existed before
ongoing.
this
Yeah.
proposal, which actually
Okay.
never took effect.
Right, right. Okay, that's helpful. Community banks benefited from high deposits during the pandemic. Since then, the net interest margin for community banks has fallen. What specific challenges do you see for community banks, if any?
Community banks, are very important. We want a banking system that has all different sizes and shapes of banks, and community banks are absolutely critical. They know what's going on in communities and in a way that the big banks can't possibly. So they're a critical part of our infrastructure, and I think they've been under pressure because, frankly, regulatory costs fixed costs of regulation have gone up. We try not to contribute to that. The number of banks has been going down pretty steadily. And that's not something we're trying to foster, but it's a sort of long run trend of really the last 30 years. So we try not to add to what is a secular trend because we think they're important.
Thank you. Thank you for being here. Appreciate it.
Thanks.
Ms. Chairwoman, I yield my time.
Who's up next? Senator Britt.
Thank you very much, Madam Vice Chair. Chair Powell, thank you for being here with us today. I want to start just by echoing the comments of Senator Cortez Masto when it comes to community banks. Obviously believe that community banks and credit unions, financial institutions that serve everyday Americans and main streets across the great state of Alabama and our country are so critically important to people being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times that you've been in front of us. We've talked about the rewrite of Basel III. We've talked about long-term debt. We've talked about Reg II. We talked about a ton of things and talked about my concern that no one was looking at the cumulative impact of those things and the trickle-down effect. I just want to get a commitment from you that as you are reviewing rulemaking across the board, that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial industries like the ag sector who did not maybe have a seat at the table in previous administrations, but give them a seat at the table and make sure that you're thinking about the impact on those individuals and the people they serve.
I'm happy to make that commitment.
Thank you so much, Chair Powell. I also want to talk to you about an issue that has been brought up briefly today by another colleague of mine, but that is about childcare. So when we look at the childcare crisis in this country, we know that our economy loses about $122 billion a year because of affordability and accessibility, reliability, if you will, of childcare. It is said that anyone who has a child between the ages 0 and 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and or part-time working parents say that they would like to re-enter the workforce, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity and bring those things into fruition, would you agree that taking a look and being able to address, not asking you to comment on any specific proposal, but addressing some of the shortfalls related to accessibility and affordability of childcare would have a positive long-term impact on the economy?
So I think there's quite a bit of research showing exactly that, and we really saw it during the pandemic. As I think you know and pointed out, it's not an issue that we play a role on, but clearly it would contribute. Childcare would contribute to participation in the labor force by many.
Absolutely. And as Alabama looks, we look at our labor participation rate. It is 5 points lower than the national average. We continue to look to ways to get people re-engaged in the workforce and know that addressing this head on will help us be able to achieve that. So thank you so much, Chair Powell. I look forward to continuing to work to get that done. So there has been some angst vocalized about the reconciliation bill and the president's trade policies. And from my perspective, much of that skepticism is both unfair and premature. Market resiliency and recent economic data actually continues to reflect confidence in the U.S. economy. Look at the recent Treasury auction, which was notably successful and saw stronger than expected demands for 30-year bonds and stable, even slightly declining yields. To me, this demonstrates that investors still view the U.S. debt as an attractive asset, regardless of the ongoing policy discussions and debates and forging a pathway forward. And those fundamentals of the economy, actually remain quite strong. Chair Powell, would you agree that the components of our economy actually remain quite strong? And how does the Fed consider this type of strong auction performance in the context of your market expectations and monetary policy discussions?
As you point out, the Treasury market is working fine just now. Liquidity is adequate, and bond prices are responding to economic events, and so bond market's in good shape. In terms of the strength of the economy, I would strongly agree. The labor market's in a solid place. The economy's growing. Inflation is in a pretty good place, come much closer to 2%. So it's a very solid economy. We are watching the labor market very closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff rate. But if we were to start to see layoffs, we would see unemployment go up quickly, and so we're watching that carefully. But the labor market has remained solid, and I would agree with your overall characterization.
Thank you. Appreciate you being here today.
Thank you, ma'am.
Senator Kim.
Yeah, thank you, Chairman. Thank you for coming before us today. You've often said in the past that when it comes to monetary policy, that it works with a lag, right? That this is something that you're having to try to assess the data that's before you.
Right.
I'm thinking about this because we have the Federal Open Market Committee, FOMC 5-year review, and you were talking about tariffs and the uncertainty of this moment. So I guess I just wanted to ask you, how do you balance sort of assessing between more of the backwards looking data that you're able to look at more tangibly in that way, but also addressing sort of forward looking models to try to understand where things are heading?
That's really the challenge that all forecasters have. And really monetary policy needs to be forward looking. At the same time, we need to be humble about our how hard it is to forecast. So particularly at times of high uncertainty, which I would say I would include now, you really want to look at the real data and take signal from that, and not be too brave about what your forecast might be, because it's going to be highly uncertain.
So you're saying that in times of greater uncertainty, in some ways that makes you more interested in the backwards looking data to sort of guide you.
Well, I'd almost flip it around. Yes, but I'd almost flip it around and say at a time like that, you don't want to be giving a lot of forward guidance, and you don't want to be acting as though you have a lot of certainty about the path forward. It makes sense to move more slowly in most situations where there's more uncertainty. There are situations where it would not make sense to move slowly, but in most cases, you'd want to move more slowly.
Yeah,
It's
that's
uncertain.
interesting. I mean, I talked to some of my constituents back home. There's this one conversation I had that has really stuck with me, where, a woman was telling me that, there's so much uncertainty right now in the world and certainly in her life that she says it's hard for her to even breathe. Sometimes she just feels this kind of weight upon her chest. And I've thought about that a lot, because I try to think through what can we do to try to alleviate that concern, alleviate that anxiety for people. But you can see it. I mean, right now, whether it's about what's unfolding in the Middle East and the fragility of what comes next. When I look at this reconciliation bill before us in the Senate, I do worry not just about the deficit, as some of my colleagues have mentioned, but about the potential of significant job loss that we're seeing, whether in the healthcare industry, whether in the energy industries. And certainly when it comes to tariffs, as you said, trying to think through what comes next in terms of whether deals are struck and at what levels. Are you taking into account that by sort of an issue-based level, or are you looking at sort of the global instability in terms of the different crises that are out there? Is that factoring into how you're thinking about when we're talking about legislation here? I know you're not going to go into the policy per se, but if there's a potential for significant job disruption, is that something that you're looking into as you're forecasting?
Yes. We obviously pay great attention to global events, and in an effort to understand what's going on in the economy globally, because that does matter for our economy. So we pay close attention to all of those things and track them. Ultimately, though, we're looking at the U.S. economy and what are the fundamental drivers here, and then making a judgment based on all of that. And mainly, this is a big economy, and we're geographically separated from most of the other big economies in the world. So we have a smaller external sector than most of the all the European economies, for example. So we're really looking at the U.S. and what's happening here.
I wanted to ask you because, in central banks in other countries, including Bank of England and European Central Bank, they've begun modeling the potential macroeconomic effects of artificial intelligence. They're thinking about how they can use AI to be able to do some of the forecasting, to think through what comes next. I guess I wanted to get a sense of what the Federal Reserve is thinking in terms of similar work in the AI space.
We have lots of people doing work on AI, and more than that, even monitoring research that's going on everywhere in the world. And speaking of uncertainty, it's very clear that it has the potential to make really dramatic changes in our economy, in our workplace, in the jobs of workers, in the way companies work, and all of those things. But it honestly, there's a tremendous uncertainty about the timing of that, and what the ultimate consequences will be, and what the medium-term consequences will be.
I was wondering if the Fed is evaluating AI credit models and how that could potentially deepen disparity in credit access or violate fair lending standards. Is that something that you've looked into at this point? And
yes, absolutely.
Is the Fed looking to potentially affirm some industry standards on this?
It's something we've been aware of for a long time. There's a lot of research that's been done before generative AI came along. It's also just machine learning and technology generally. There are implicit biases that can appear. It's something we're very well aware of, and we do work with people to make sure that doesn't happen.
Okay, thank you. I yield back.
Thank you, Senator Banks.
Thank you, Mr. Chairman. Chair Powell, can you talk about how our interest rates compare to other first-class countries around the world?
At the higher end.
And how does that affect the United States?
Well, I mean, I think that reflects a couple of things. One is just that the U.S. economy has outperformed, has been stronger than others. And I mean, I don't want to pick on any other nations, but many other nations have had much lower growth, now have lower inflation and are, have pretty low growth, whereas the U.S. economy has really been the outstanding performer and remains that to this day. That implies somewhat higher rates.
So you say it's higher than most of first-class countries. Can you talk about historically where we've matched up with other countries?
Yeah, I mean, so let's just go back to when the pandemic hit, for example. We were at, we had very low rates during that era, but they were by far the highest in the developed world because the U.S. economy was the strongest. The European Union had negative rates. I think the Bank of England was at 75 basis points. I think we were at 2.4%. So we were meaningfully higher. And again, it was a time when we were our growth was higher and their growth was lower and their inflation was lower. Our inflation was fine, probably about the same as ours. So I think we've generally had a little bit higher rates than those countries because they have slower growth, older populations, lower productivity, those kind of things. We have the strongest economy in the world.
Globally gone up as well.
Sorry?
Have interest rates in those countries globally gone up as well?
Well,
Not as
they
much
went
as
up.
the US?
All of those countries had their rates go up quite a bit during the global pandemic inflation, right? And as you know, many of them have been cutting their rates, and we had been too. And we'll at some point resume that. But we're 100 basis points lower than we were. I think if you take the EU and the Bank of England, they've both cut a little more than that.
How recently?
Recently, but but I think you probably read this, but they're either at or close to the end of their cutting cycles.
I know there's been a lot of talk today about deficits and the national debt, but how much does tax policy affect the economy in the U.S.?
I mean, it has big effects over time. It's really not something that drives what we do. It isn't, but I think tax policy plays over the long run a huge role in incentivizing investment, which helps growth and things like that. I think it's very, very important over the long run, certainly more important than monetary policy.
Would a $4 trillion tax increase on middle-class Americans affect the economy?
Now here we're getting into the bill.
Yeah, I understand. I'm asking how that would affect the economy and according to your data.
I'm trying to not make any direct comments on the bill today, if you'll forgive me. But I take your point.
Okay, I am trying to make a point, but there's got to be data that you sit on somewhere that would suggest that large tax increases would affect the economy, would stall economic growth in the U.S.
You could certainly get that out of a model if you wanted to. I mean, but again, I'm inevitably going to be commenting on the bill, right? If I answer that question, so
a lot of talk today about inflation. You've already agreed that inflation is down from where it was a year ago, and would you say steadily declining?
Has been, yes. I more than agreed to it. I'm very pleased by it.
And all of the experts and so-called experts tell us that tariffs lead to inflation. But you seem to have suggested already that inflation is, if not under control, close to being under control.
So inflation's in a really good place. It is definitely in a good place. And, we have a forecast, and so does, by the way, every other, brand name forecaster in the country, which is very similar to ours, that there will be some inflation from tariffs coming. Not yet, but over the course of the coming months. And I think it's reasonable to expect that because someone has to pay. This is hundreds of billions of dollars of tariffs we're taking in. Some of that's going to fall on the consumer. Not all of it's going to fall on foreign manufacturers. And that's the only insight we have. And we're just kind of wanting to see more data on that before we move.
One final question about data. Our trade deficits with China, the EU, Canada, and Mexico have all significantly dropped recently. What does the data tell us about that?
Well, I think that's
how that would affect inflation.
How it would affect inflation. I don't know that it has implications for inflation, but it obviously reflects the tariffs. I think recently you've seen Chinese imports come down quite a bit.
Thank you. I yield back.
Thanks.
Senator Blunt, Rochester.
Thank you, Mr. Chairman and Ranking Member Warren. Chair Powell, welcome back. Inflation has come down meaningfully from its peak, and there are signs of moderation in the broader community economy. But prices for rent and other essential services remain high, and the outlook is still uncertain. Wage growth remains strong, but productivity trends are mixed, and demand for places to live is high, but borrowing costs and material shortages are making it harder for builders to keep up, adding to the affordability pressures. And at the same time, while I know this is not something you would say, but at the same time, while our Republican colleagues are pushing for tax cuts for the wealthiest Americans that would expand the deficit, the administration's trade and immigration policies are also introducing uncertainty that may not yet be fully reflected in the economy. For families that I represent, the cost of living remains painfully high. Premature easing could have unintended consequences that undo the progress we've made. Later this year, the Fed will update its monetary policy framework to respond to today's inflationary environment. And after years of supply shocks, housing inflation, and fiscal volatility, I hope you will remain strengthened, that the Fed's ability to navigate the more uncertain economy. And as you undertake this update, can you talk about how you're adapting the framework to these realities while preserving the Fed's commitment to full employment?
I'd be glad to. So we made changes in the year 2020 to our framework, and those were meant to take on board the special issues that a central bank faces during the era of extremely low interest rates, where rates were never very far from zero. In fact, we just barely got away from zero when we had to cut back to zero. And the feeling was very much that if we had any kind of a shock, we'd be back at zero for years on end again. And that's really not a good thing, because the economy can become very stagnant. So what's happened since then, the big thing is interest rates are back to much more normal levels historically. So our policy rate at 4.3% actually doesn't feel like it's particularly restrictive. So it's, in other words, rates have moved way back up. That means that the effective lower bound is less of a problem. It means that the changes we made in 2020 are less relevant. They're not completely irrelevant. So we're making modifications, which we'll be discussing inside of our committee now in the next meeting and in the next meeting, that will return the forecast more to what it was before the 2020 cycle.
I know we had a chance to talk in the past about my focus on jobs and the economy and labor. And I want to follow up on Senator Kim's questioning, where the focus on the changing technology landscape and with artificial intelligence, generative AI, and just its impact on the economy and labor market. How would you describe AI's impact on the economy so far, and how is the Fed measuring it?
The effects of AI are probably not great at this time. Generative AI, and the question is, how great will they be, and how big will they be, and how quickly will that happen? And anyone who's been exposed to what AI is capable of has to be pretty stunned by what it's capable of. And this is even the early days too. What the experts tell us is that in 2 years, these things that you're doing, that'll be nothing compared to what we can do in 2 years. So I think it has enormous capabilities to make really significant changes in the economy and the labor force. And it can either augment people's productivity, or it can replace people, or it can do a little bit of both. Right. But it's going to be something.
You preempted my question, actually. I saw a recent article, and a CEO of an AI company actually said AI could, quote, wipe out half of all entry-level white-collar jobs and spike unemployment to 10 or 20%. And I think he said in like a matter of a year or two. Do you think this is a reasonable perspective? And how would AI-driven productivity gains or worker displacement affect how the Fed defines full employment?
I don't know whether that's, I'm not the person to say how quickly that will happen. What's happened before with technology is it just seems to take a long time to be implemented. There's the technology, what it's capable of, and there's what it actually does when implemented. That last phase has tended to take longer than people expect. Will it happen with AI? It probably will, but in terms of maximum employment, we don't, the Fed doesn't have the tools to really address the social issues that and labor market issues that will arise from this. We don't have those tools. We just have interest rates, and we'll always be able to balance the labor market so that supply and demand are in balance. But things like what AI does and what other things do from the outside, we just have to take them as they come.
Thank you.
Thank you. I yield back.
Yes, ma'am. Senator Tillis.
Thank you, Chair, for being here. Maybe just, I didn't expect to talk about it, but since AI came up, I mean, first off, we need to welcome it, exploit it, and benefit from it. I've had my staff try and go back and look at some of the congressional hearings in the times of the Industrial Revolution and other instances where we've had these threats of displacement, and it worked out okay for us. But the key is this is a global competition, and other countries are going to implement it. It is going to drive down their costs, and it will make us less competitive if we don't meet the challenge and become the innovator. But the transition is very important to note. I want to talk about SLR for a minute. I think you all indicated the balance sheet's going to continue to shrink. We're not going to get to pre-COVID levels, which was, I think, somewhere around $4 trillion. So I guess the question is, you guys expect to hold higher levels of central banks to hold higher levels of central bank reserves than we have in previous years. Do you agree with that?
I don't think we'll get all the way back to where we were, but we're still shrinking.
Is it fair to say that the SLR should be updated to reflect the evolving preference?
Yes.
Thank you. Fed now. It's cost $545 million. Chair Powell, I've never really liked Fed now, so it's probably not a friendly question. But I spent $545 million to implement it now. I think you're expected to spend another $245 million in 2025. So the total price tag is $1 billion. As you know, the Money Control Act requires the Fed to cover all the direct and indirect costs actually incurred. So can you give me an idea of when we're going to see a fee structure that's going to generate and actually pay for this implementation, including the expected ongoing operational costs?
So you're right. That is our obligation under the law, is to have it be self-funding, and we have a period during which that's supposed to happen.
Yeah.
Uptake has been steady but not rapid, and usage
Is it your
has
sense that you're going to be able to get to that, and that the fee structure that you're going to need based on that take rate is going to be achievable?
I think it's probably still achievable. I am not 100% clear that we're going to achieve it very soon.
That'd be it. Yeah, that's what I'm concerned. And I wonder if that pricing is there, given private sector options, if you're ever going to be able to get there. So just an editorial comment. One thing I did want to mention, I'm excited to see some of my colleagues on the other side of the dais concerned about the debt. Because last time I checked, over the 4 years that President Biden was in office, we had the American Rescue Plan that cost us $2 trillion. We had the Inflation Reduction Act that cost us $1 trillion. And we had the PACT Act that many of my colleagues, I was one of 9 Republicans that didn't vote for it, that also cost us $1 trillion. So I'm excited to see that my colleagues on the other side of the aisle want to get serious about spending within our means. I did have a question, I think, for my staff wanted to ask about, sorry, I just want to get my notes right. I actually wanted to go, I don't have it before me, but what's the current status in your view on Wells Fargo's capital requirements?
On their capital requirement? Well, I think you mean on the growth cap?
Yeah.
Yeah. So we voted unanimously to remove that after many years of having it in place. They did satisfy the requirements we'd put in place, and we removed the cap along with the other agencies.
And you think your fact-based decision, you stand by it?
I do.
Very good. Last thing is Walmart. I've got other questions I'll submit for the record, Chair, but Walmart on April 9th, I think, withdrew their forward guidance. And they indicated the reason that they were doing that is there was uncertainty, and it seems to have been timed somewhat with the uncertainty around trade. So I would just suggest for my colleagues, I don't know if you can respond to this or not. I won't ask you a tax question, but I really want to. But I know what your answer is going to be. You're a good dancer. I think that it is fair to say that if there is going to be a correlation to increasing prices, and Walmart having made the decision to withdraw their guidance is probably the best testament that they know that they may have to deal with cost and maybe inflationary uncertainties. Would you characterize that as maybe a likely reason that they withdrew their guidance?
It might be. I saw that they had. I didn't have a chance to go back and check why.
Well, if you tease through the language, it seems almost certain that they think that some of their input costs were going to go up, and they need to manage their margins. So I'm just telling my colleagues, we just need to be realistic that if you have a major household name withdrawing guidance because of uncertainty, they've got a lot of experts that probably are suggesting there may be some inflationary risk. We haven't realized it yet, but I think we all need to keep our eyes open and not look past it so that we can manage it if it comes to pass. I don't think that there should be a problem with that.
Thank you.
Now, the last thing that I just want to mention is that you can't respond to this, but I will tell you, if the Democrats succeed in preventing us from avoiding the biggest tax hike in the history of this country, it is going to cause great damage to the people who can least afford it. You don't get to respond to this one, but folks.
Senator also Brooks is next.
Oh, I'm sorry. I didn't realize she was here.
Yes.
I'm sorry.
We were
but we need to open that. We need to be open. We need to understand that you will have something to fix if we fail to continue the tax cuts.
Thank you, sir. Senator also Brooks.
Thank you so much. First to Chair Scott and Ranking Member Warren, thank you so much for hosting today's hearing. We thank you also, Chairman Powell, for your tremendous service to our country. I very much enjoyed the meeting that we had earlier this year and look forward to working with you. Many of my colleagues today have been listening to this hearing, have rightly discussed concerns regarding how tariffs are affecting consumers and businesses. And I'd like to highlight a specific business in Maryland that encapsulates the harm that I believe this administration is inflicting, but also the resilience of a proud Maryland small business. Baydog is a successful pet brand based on Kent Island, one founded by Barton O'Brien, who's a Marine veteran who served 3 combat tours overseas. Mr. O'Brien has calculated that if he were to make his products in the United States, he would have to raise his prices 400% just to break even. The tariffs, he believes, are a burdensome tax that could put companies like his out of business, but the damage doesn't stop there. Baydog is sold in thousands of other brick and mortar stores across the country, all locally owned small businesses who similarly have to raise prices or lose sales to pay the president's tax. Mr. O'Brien started planning for this last summer when President Trump started talking about tariffs during the campaign. He stockpiled inventory and has committed to keeping his prices stable this year. But what Baydog is asking is, what is he to do if the tariffs are in place next year? Mr. O'Brien has calculated that he won't have to just raise prices. He'll likely have to cut his staff to stay in business. So Chair Powell, there are 34 million small businesses in America, 1 for every 10 people. And if small businesses like Baydog have to lay off staff or go out of business altogether, what will that do to unemployment in this country, and what effect will that have on the broader economy?
I mean, just mechanically, I don't want to comment on particular tariff policies, but sure, if companies go out of business, then that'll hurt employment and activity.
And what we will see is, of course, and we have so many small businesses, what we're facing now is that very prospect, is that we're going to have so many. And we believe that, the inflation caused by these tariffs will really have a very negative impact. And if this is the case, what would this mean for American workers?
Well, the other thing is, I think the tariffs are still in motion. It's premature to say exactly where they're going to land. So we're kind of withholding judgment until we see more. That's kind of where we are. We haven't made a decision to do anything. It's just we want to see more. And the situation evolves day by day, month by month. So.
Okay. Well, in another question, in our meeting and in your most recent monetary policy report, you spoke of the long-term challenge of housing supply not meeting demand. And I look at this issue the same way I did as county executive, where I really fought hard to leverage private and public sector dollars to bring more housing to communities that needed it. Maryland has a shortfall of nearly 100,000 homes, and the pathway to build wealth is therefore narrowing. So studies have estimated that of the over $200 billion invested annually in housing in recent years, only a fraction supports affordable homes for working class families. So would you speak to the need to better incentivize private investments into affordable housing construction? I'm working with the private sector and nonprofit stakeholders on legislation now, but just wanted to know if you could comment on that.
So I would say this: interest rates are slightly restrictive at this point, modestly restrictive, and that is weighing on economic activity in the housing market sector. But you're really talking about a different problem. It's not one that the Fed can really address, and that is we have a longer run housing shortage. So many other advanced economy countries have this too, and it's not our tool. Our tools don't really work to affect that. It's really elected people, and you saw this as county executive. It's things that the legislature can do that can really address that. Not us. It's not about interest rates.
All right. Well, now I understand one other issue. The Fed is evaluating the leverage ratio rules regarding the amount of capital required to be held by banks to withstand unforeseen risks. And I'm hoping you can then provide some insight as to what potential changes this framework are meant to achieve. On the other hand, I understand that access to capital is paramount, particularly for communities I represent. So and I understand concerns that a change in these requirements could affect the resilience of the banking sector. Though I know you cannot speak to the specifics of the coming proposal, would you share some insights into what problem the proposed rulemaking is meant to solve? And are you concerned that it could lead to a deterioration of resilience of the banking sector?
I'd be glad to. So the idea behind it is that we want risk-based capital to be the binding capital requirement, because we want the binding capital requirement to be, we want banks to be sensitive to the risks that they're taking. If the leverage ratio is not risk sensitive, it treats every asset as equally risky. So if that's binding, then that interferes with banks' incentives to manage their risks and actually discourages banks from taking on relatively low risk activity. So we've always at the Fed wanted the risk-based capital to be the binding one and the leverage ratio to be the backstop. And so that's this proposal that we have that we're going to be meeting on in a couple of hours puts out for comment a proposal to restore the the backstop characteristics of the leverage ratio. We think it should make it will not in any way diminish the safety and soundness of the financial system, and it will allow for banks to undertake lower risk. Thanks.
Thank you so much. Thank you, Mr. Chair.
Yes, ma'am. Thank you. For senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Wednesday, July 2nd. Chairman Powell, you have 45 days from that day to submit your responses to questions for the record. Thank you for being here. This committee is adjourned.
Thank you.
Zaxby's birthday cake milkshake is back. Happy birthday.